What's up, everybody? This is the first version of the cryptocurrent while it's daytime and I can speak at a normal volume. And basically, let's get into it. It's been a pretty good day news-wise. Goldman Sachs latest to label crypto a business risk. Again, it's ironic after Bank of America said the other day that it was a risk, and they are one of the heavier investors in it. And Goldman Sachs owns Circle, which was also in the news today. But one of the things that resulted from this article is that they confirmed that crypto is a major competitor. Because if it was a highly risky thing, why would they be investing in it at all if they feel like it's a scam and whatnot, unless it was threatening their own business? So that would explain why they're investing in it and plan on eventually offering like Bitcoin futures before most other investment firms and such are. But the company wrote, we may be or may become exposed to risks related to distributed ledger technology through our facilitation of clients' activities involving financial products linked to distributed ledger technology, such as blockchain or cryptocurrencies. Our investments in companies that seek to develop platforms based on distributed ledger technology and the use of distributed ledger technology by third-party vendors, clients, counterparties, clearinghouses, and other financial intermediaries. So what it basically means is they're either worried it will either be compromised as a whole, and they don't really believe in the security of the technology, because if they don't believe in the security of the technology, then they basically think that someone can hack the code and then read like this entire public ledger. I guess I kind of have here, like, I guess the only way they're probably thinking that happens is it appears they're fearful the distributed ledger will become wholly compromised and all the info within will be decrypted, unhashed, and then made public to the layman. Basically, instead of having to track all these wallet addresses and whatnot, and just like seeing that they sent something somewhere or they said that they paid Litecoin Foundation on this time, so then you find the transaction that happened at that time. Like, there's ways to ultimately reverse it back, but then if it got entirely compromised, they could just make it as easy as like looking up a wallet and then getting the name and information of that person. If they think that it can get hacked all the way down to the know your customers that are forced on like Gemini and Coinbase and things like that, it would just be much easier to then like corrupt it. But that's not really a plausible thing when it comes to like Bitcoin and Litecoin and some of these like more established and like tried and true cryptocurrencies, as long as they have been around. It's not like if there's like shitcoin X and it makes it so there's no one using it and you can easily just overwhelm like the amount of confirmations on it, then that would be an entirely different story. But even then, it wouldn't be what they're probably fearful of. And I thought the most ironic part about it was that they were the first reported to do Bitcoin futures trading, and then in January, the CEO Lloyd Blankfein denied a report that the bank was eyeing the launch of a dedicated trading desk for Bitcoin, although he did leave the door open. He said, "We're a prime broker, and so if our clients are going to do it, we're going to do it. A principal Bitcoin business where we're going long and short market making. So far, we're not," he said at the time. So if his clients and whatnot were forcing it upon him, saying they need to invest in this or they want to invest in this, etc., then he would do it. But he's not exactly going out of his way to implement it as far as their trading goes. But they own Circle, and Circle just announced that it is acquiring U.S.-based cryptocurrency exchange Poloniex. According to Fortune, Circle is paying $400 million for the acquisition. It used to be one of the most popular United States exchanges, and it still is one of the most popular exchanges that's based in the United States. But exchanges like Binance and KuCoin have started stepping up in terms of like coins they acquire, what their user interface looks like, how easy it is to export their trade data, and et cetera, that they've just been kind of like getting a little bit ahead of Poloniex in usage. Circle initially was a Bitcoin company, quote unquote. You can buy and sell Bitcoins quickly and easily without any technical knowledge. In 2013, that was the first Bitcoin boom, and after that, they went to become a social payment company, a Venmo competitor. They existed for a small amount of time. I remember having the app, but they got wrecked by Venmo. And I think not only was it the fact that Venmo became more widely adopted and got rid of fees and like had some major things happen first, the people I know who don't really pay attention to those types of things, they're more interested in like how easy it is to use and what it looks like, etc., etc. They love Venmo because of that, because you just set up the card and then everything else is super straightforward. It's a fairly pleasant looking interface and it's clean. So what Circle is trying to do now is buy Poloniex, not only to get the profits from the exchange itself, but to go the next step forward and try to integrate it. The company now wants to expand beyond those two products with Circle Invest, an easy-to-use investment app to start buying cryptocurrencies, and Poloniex, a full-fledged exchange. So then you would have the app probably be linked to your money that's already on your Circle account. You use that money that is now on your Circle account to buy things on Poloniex through their app, aka they get a piece of the pie at every step. Fortune says that Circle is also working on Centra, a protocol that is going to make LitePay, PayPal, and Circle and other digital wallets interoperable. And if you're a Poloniex user, Circle says that the transition should be smooth. So in theory, like if you're using LitePay and PayPal, which are the two most common ones in China and North America, you could very easily just send money back and forth globally through Circle, which means not only are they going to have a huge share of like the North American market, they're now also going to have the Asia market. And if they also start doing some of these they start linking to apps or like these mobile payment processors that they already have in some European countries, where you just carry around like a little pin pad and then you can scan cards anywhere and send money to each other anywhere through that. If they start integrating with those, then this can be like an entirely global platform, with Poloniex being the initial exchange that they buy and trade the cryptocurrencies in. It's huge news. I just thought, like, the same day that the Goldman Sachs announced that it was kind of like a risk, and previously said like words like scam and things like that, that now one of the hot companies that they bought acquired Poloniex, and their plan is to integrate it all. I'm assuming also with banks and financial institutions, since Circle Invest is probably their most direct connection with Goldman Sachs. So if it's linked directly to Poloniex and their whole plan to like create it all in one center, then it's big news. However, the security involved in all that will be ridiculous. Goldman Sachs, if they have any say in it, is not going to want it to be a true like blockchain public ledger. They're going to want to have some sort of centralization, and then that centralization will get hacked, because it will have the globe. In theory, it could have the entire world's information on it. So while there's a lot of promise, there's also a lot of risk with that. But it's very interesting. It's a big step forward that not only is it a company like Circle, which already is probably more cash liquid than most other like technical startups, or cash fluid. Now they also have Goldman Sachs as like a hard financial backing. Another article that was pretty popular today on CoinDesk is Bitcoin eyes 10K, but price outlook favors bears. The false bull trend started to, or it basically became identified as a false bull trend at 11.7 thousand, as it started to go up and then immediately took a heavy dip, and now has showed some steady stabilization around this low 9 to high 9 range. Let me see, mostly 9,400. I'll be honest that I typically don't check how much Bitcoin is across a lot of exchanges. I'll do that for like Neo or coins outside of the big three of Bitcoin, Ethereum, and Litecoin, to see what the price is for all of those other coins are on exchanges. But for Bitcoin, I just check Coinbase, and it's been on floating around like 94 to 97 on Coinbase for a few days in a row. It's trying to break the resistance line of about 10.5K, which it was at before, just to show that it really is starting to trend in a bullish manner. Basically mean it's starting to go up, and it's not just like a random peak. It actually is exhibiting a trend of going up. Once it breaks 11.8K again, not in terms of just like a random spike, but actually like 2 days of exceeding past it, or hitting it and then stabilizing for a day or two as well, it'll be a major sign of a bull trend that the value of it is going back up. However, if this ends up being a much longer stabilization period, like when we look back on this few month period in, let's say, April, we could see it look relatively less fluctuating when you compare the chart overall, and we might be in a bit of a stabilization period, like long term, which is what I'm thinking. Not long term like years, but long term in terms of cryptocurrency. To have some price stabilization for a month is unheard of. So if it just stays somewhere between like 89 or 9,000 and 10 to 11, while compared to other stocks and currencies or major fiat currencies, that's a little more price volatility. but it's nothing like the fear of it losing 50 to 60, or if you bought an altcoin, like 90% of its value over the course of a few days. On the flip side of that, if it continues to keep falling and it goes below 7,000 again, it's definitely time to pick up, because I bought a lot at 79 and then it continued to fall. Looking back on it, it looks like that was definitely a buy too high on my part. If I was a little more acquainted with the charts, I could have seen that it was going to continue to go down for a little bit. I probably wouldn't have guessed that it would gone down below 6K like it did at some points. I wasn't looking at the price of it when it fell below 6, but if I were more acquainted with the charts back then, I could have saw that it was going to probably hit 7 or low 7, or I'm sorry, 7 or slightly below 7. So I still would have missed, but I would have missed by less. And the summary of it is like the corrective rally from the lows below 6,000 ended at last week's highs above 11.7, and the sell-off will likely resume this week or next week, according to the weekly chart. Bitcoin is likely to test 8.2 thousand, 61.8% Fibonacci retracement of the recent rally in the short run. A daily close, as per UTC, below that level would shift attention to 6,000. Possible corrective rally is likely to run out of steam around the downward sloping, biased bearish 10-week, now seen at 11.2K. Long-term bearish to bullish trend change would be confirmed once the weekly RSI has moved to above the resistance at 53. So you can see basically the normalization of the graph shows some pretty routine spikes, and as it was going down on the bearish trend, it did not spike above the 53% line, which is basically that line right there. So the fall, it was going to be concerning if it continued to have like a stabilization and then fall some more. It stabilized, it went up, and now it still didn't go up quite as much as we thought. So rather than it being like a confirmed bullish trend, it stabilized and actually dipped slightly. So like I said, this could be a sign of like a longer term stabilization, or the end of the stabilization and continuing to go up. I do not think that it will fall back down to the 6,000 range. So like I said, if it hits 7 or slightly below 7, definitely pick it up. This is basically a Ponzi scheme. I'm not going to read too much. I didn't even use this new like note thing that I've been using on the other stories for it. They're saying if you invest in them, that you'll get Ether back. No information on the algorithm, no information on what they'll be investing in. The calculator just lets you put in your Ether and it'll tell you how much you get back and what the possible percentages are, not how it happens. I hate that. I'm not into that. I like Stash because you can get fractional shares, but you're not buying fractional shares in like some mysterious guy who's investing that shit for you. You buy fractional shares in like pre-planned, pre-made portfolios that you can buy in. That's a much better thing than this just like, hey, give us 1,000 Ether and then you'll get 10,000 Ether back, bro, we promise. So yeah, Phoenix is a Ponzi scheme, and apparently everyone's okay with that who reports the news. For Europe, sorry, I thought I was at the next article. Europe still isn't ready to regulate cryptocurrencies. Despite calls for action that would be regulators in Germany and France, and Europol's recent claim that 5.5 billion is being laundered in Europe via cryptocurrency, the European Commission still isn't ready to force regulations on the emerging market. That 5.5 billion number definitely like includes way too many transactions, like sending back and forth, typical transactions that just can't be traced to like a coinpayments.net or something. They think anything that's done like intentionally to not be tracked is then money laundering, which is just not factual. So that number is too high, but I'm sure there's plenty of money laundering going on through cryptocurrency in Europe. I just don't believe in 5.5 billion. Haste makes waste. Instead of rushing into regulatory measures, Pete Kirstens, leader of the European Commission's FinTech Task Force, has wanted to go about it in a different approach. We should think of what are the risks in order to know what should be regulated. So we know right now, he's basically saying that they know right now there are some concerns with it. It is going to have to be regulated, but we're nowhere near informed enough to now try to like create laws around it and then try to get enough of a consensus to change or remove that law and then put in place a new one. He claimed that there is no cause for immediate concern on the European continent since most of the $432 billion market at the time of this writing is owned by Asian investors. Next month, the European Commission will publish their plan of action in regards to fintech, which will almost certainly outline a roadmap for the issuance of EU-wide licenses for crowdfunded startups, aka ICOs as well as other non-ICO crowdfunded startups. According to Kirstens, the Commission actually wishes to make it easier for blockchain companies to operate. At the moment, 11 different European regimes are in some way hindering development, which is stalling growth when compared to the US and much of Asia, basically saying, no, you can't get this funding, no, you can't do this, no, we are not on board, therefore hindering it, rather than America having universities and institutions like MIT or Stanford or Columbia and things like that, and Berkeley even trying to get really into like cryptocurrency and blockchain technologies. In China and Asia markets, which have already been ahead of the curve, and America is catching up to them. So now Europe is realizing that they're falling behind on this thing that's here to stay and here to grow. Not everyone shares their view. However, European supervisory authorities issued a warning earlier this month saying they are highly risky and unregulated products and are unsuitable as investments, savings, or retirement planning products. It's a combination of a bubble, a Ponzi scheme, and an environmental disaster. Yes, they are unregulated products, but that does not necessarily make them inherently evil. At some point in time, believe it or not, everything was unregulated, and not everything that was made was illegal. They are unsuitable as investments, wrong. Savings, slightly more true. Or retirement planning products, probably significantly more true. Because in theory, your retirement planning product is money you set aside to be sure that when you're older, it is there. So unless you live in a country with a highly non-stable fiat, like a smaller country, like, I don't know, like honestly one of the African countries, a place like Thailand, some of the South American countries like Venezuela, like outside of those, you are probably better off holding your fiat in terms of a retirement planning product. But your savings, you can always set aside a small percentage, like a smaller percentage than typical. So let's say you want to put 10% of your money in savings. You can put 9% in your traditional savings and 1% in this crypto savings. So that way, if you lose that 1%, you still have this money. You still have the majority of it, 90%, in your traditional fiat. And the 10% could then gone up, 100x, 1000x, whatever. Like it could moon and moon and moon. And it also could become nothing. So that 1% could then be worth more than that 9% you invested. And also, if you lost it, it would not hurt as bad. Hopefully that made some sense. And as an investment, that's what it's for, other like outside of cryptocurrencies, but like these tokens, which are basically digital shares or like utility tokens. These are great investments, like plain and simple. You invest in something you believe in. You don't have to go through a middleman or a broker or some sort of like third-party regulation committee. You just say, hey, I like your shit. I read your white paper. I'm not technically adept, but I asked people who were, and they confirmed that, yes, this is a stable product. Let me invest in it and hold these tokens. Like, it's not overly complicated. I think once they kind of go about the same thing that Switzerland is, as well as some Americans, like with the recent New York news, is that they really are trying to differentiate typical cryptocurrencies, which are trying to basically establish themselves as fiat, or these security tokens, which are trying to establish themselves as like investments, like entirely investments and entirely securities, rather than just having the benefits of a currency as well as those. Others, however, agree with Kirstens and the European Commission's approach, basically saying that Ashley Fox claimed that cryptocurrencies exist because of obvious consumer demand, in addition to citing the lack of trust in the nation state, though he still prefers blockchain technology to cryptocurrencies themselves. Again, someone in a high position of power understanding the difference between blockchain and cryptocurrency. Very rare, very encouraging that that individual, Ashley Fox, does indeed know that. So I think it's a good plan. They realize that it needs to be regulated, understandable. As like a government and a nation, they have to regulate. I think it's also promising that they're recognizing that there's differences between all of these, and they need to take time to step back and really differentiate what they are, which has been a recent trend, which that's very encouraging in general. I'm not very technically savvy, but Bitcoin Core 0.16.0 rolls out with full SegWit support, basically releasing SegWit, segregated witness, separating the signature data from the transaction data to save space and bring more efficiency to block times and transaction times, as well as lower fees. That's the short version of SegWit. The upside to the implementation is that now that it will be the standard, it's not going to be so much confusion between which wallet is what. I sent out this wrong thing. Now that it's fully integrated, it's going to be much easier to have it continue. Also, it was one of the things that a few months ago people were saying will never work, and now it's already fully implemented. Hopefully we see that it's stable and does continue to work. But that's also promising for things like Lightning Network and atomic multipath payments over Lightning, as all of these are going to continue to get more and more usage and more tested, and hopefully really alleviate some of the scaling issues that have been happening. And in this article, I haven't seen an article posted yet today, but Litecoin lifts off ahead of LitePay launch, and today was supposed to be the launch, and it's not happening because Visa and MasterCard are not going to let them function as a debit card. They have to function as a cash advance card, basically. And that changes the fee like dramatically. So they had to announce that they're not going to release LitePay now, and they don't have a future date, basically. And they're looking at finding other providers. So I don't know if they're going to have like Discover or just be in Europe where they like and use Maestro or something, which I believe is linked to MasterCard, but maybe it'll be separate. Like, I think they might have to release LitePay despite the fact that they have a picture of the Golden Gate Bridge on their site in European nations first. Otherwise, I don't think it's going to get launched. The flappening, that's just a funny thing by Charlie Lee that people are like seriously thinking is going to happen within like 2 weeks or something. Super unrealistic in terms of Litecoin taking over Bcash immediately. But yeah, that was just some interesting things of the day. Hopefully, since this is my first one during semi-normal hours, you're able to hear me better. Now that I finally looked at the camera, it looks like I was mostly off screen the whole time. And my offline laptop was visible the whole time. But yeah, hope everyone enjoyed it. You could donate Bitcoin now as well, now that the fees and stuff are lower and the transaction times are quicker. And the mempool is cleared. I thought I would make that an option too now, since it's a little more practical. And yeah, you could donate the other two. I'm repping the Litecoin shirt, so I would definitely appreciate the LTC donate, but I'll take any donate. And you don't even have to donate. One of the best things you could probably do is just tweet me at altcoinatheist, and I'll talk on Twitter, because I don't have any other social media other than YouTube, which the comment section basically creates a social media. So yeah, tweet me, follow me on Twitter, subscribe to this, like this, comment, ask questions, all that interaction stuff. Later.